Whenever some big-time, big-name hedge fund manager comes on TV, starts warning you away from the market, basically say on some, let's say, long-term trends, I am urging you to be very skeptical. Let me give you an example. On January 22nd at the World Economic Forum at Davos, Ray Dalio, the legendary founder of Bridgewater Associates, a guy with a sensational track record, came out and he made some terrifying statements. One, he said the wealth gap in this country is far too wide, true, and will likely lead to a form of politics that will hurt stock prices. He argued much higher tax rates are coming if the Democrats win big next year. He pointed out the most left-wing Democrats are calling for a 70% top marginal tax rate, although only on the richest of the rich. He said capitalism just isn't working for most people. In the grand scheme of things, I think he's mostly right about the particulars. But was there a really good reason to sell stocks in 2019? I think it was a good reason to soul search, but it came out as a good reason to sell. Item 2. Dalio noted that we're late in the economic cycle and we could be very close to a recession. The earnings tonight and this week and last week not indicating that. 3. He argued that central banks can't really cut interest rates because they've already eased, hasn't done much. He said this could be the cauldron that defines 2019 and 2020, the cauldron. Those arguments are all, well, let's say they sound pretty cogent. It was scary stuff, made you want to get rid of all the stocks you own, especially since Dalio is an acknowledged hedge fund genius. I am not being facetious. So on January 22nd, when he said these things with far more negative tidbits sprinkled in, he put the fear of God in you, or the wrath of Khan, earwig in the ear and all. He made you feel like a fool for owning stocks. As it turns out, though, that would have been a great time not to sell, but to buy. And when you look at Dalio's flagship fund at Bridgewater, its performance in the first half was reportedly down 4.9% down. And that's fine for him. He's already one of the richest men in the world. He will not miss it. But how about you? Dalio gave you some big picture reasons to be afraid. The economy was destined to slow down. Central banks like the Fed would be powerless to stop it. The fact is, though, those arguments were either wrong or they were irrelevant when they were made. Even if you were worried about what might happen in the 2020 election, that's not a reason to sell stocks in 2019, or sure, it turned out not to be. Sure, we might get President Elizabeth Warren or President Bernie Sanders. Wall Street would hate that. But right now, the leading Democratic contender is Joe Biden, who's on record telling his donors that nothing would fundamentally change. If you own stocks, that's the message you want to hear. How about the recession fears? Look, we're now in an earnings season, and while there's been some slowing year over year, and that's definitely true, it's not that major, and many companies are still beating the estimates. Most are. As for central banks, Dalio was dead wrong about us. Fed Chief Jay Powell changed his mind. He's now talking about cutting interest rates, which would boost both the economy and the stock market. When Dalio spoke to Squawk Box at Davos, the benchmark 10-year Treasury was sporting a yield of about 2.75%. Now it's just above 2, meaning the competition for the bond market has dropped off dramatically. He didn't expect that. Look, I don't mean to pick on Dalio. I respect his work. I respect this man. But his priorities as a guy with $18 billion, they're not your priorities. I'm simply saying that often these gurus, and I'm using him as an example, are full of sound and fury, signify nothing, or at least nothing to do with the stock market, with your portfolio. Yet I think Dalio caught and amplified the zeitgeist, which scared a lot of people. But look, he was wrong. If you're already a billionaire and you're worried about a populist backlash against the wealthy, I say, fine, feel free to sell everything. Go buy gold. I don't care. I might be tempted myself. But for the rest of us, we need to be very careful about believing these sweeping statements against the stock market. The worst thing about listening to so-called gurus, for all you know, Ray's changed his mind. He's got no obligation to share a strategy with the public. By all means, listen to these big-time money managers. Get your head into what they're saying, take them seriously, but acting on their advice, that's a sucker's game. So the next time you hear some hedge fund luminary warning you away from the stock market, remember that these guys are still human, and they get it wrong all the time. If you want to manage your own money, you can't borrow someone else's worldview. You need to think for yourself. Otherwise, frankly, you might as well just stick your money in an index fund and forget about it. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.